CEO of Vitale, Vitale Wealth Management, here with this week's Gradient Investments Weekly Market Update. All information is gathered as of May 5th, 2025. Let's get into the week in review. The major U.S. indexes posted some solid gains last week, capping off a 9-day winning streak for the S&P. For the week, the S&P 500 was up 2.94%. The NASDAQ was up 3.43% and the Dow was up 3.03%. Crude oil prices, however, continued their decline, ending April around $58 per barrel, making an 18% drop for the month, the largest monthly decline since November 2021. So hopefully that will lead to lower energy prices, right? Yeah, that's what we're seeing at the pump. April was a volatile month for equities, with the S&P 500 falling as much as 12.6% from where the month began. The S&P 500 index approached a bear market after falling almost 20% from the February highs. Now, despite the turbulence, the index managed to recover most of the losses and ended April down 0.7%. It was also a significant week for the economic releases. Primarily, first quarter GDP showed a contraction of 0.3%, surprising economists in marking the first decline since Q1 of 2022. This drop was attributed to a surge in imports as companies rushed to build their inventories ahead of anticipated tariff impacts. On a more positive note, the labor market remained resilient. The unemployment rate held steady at 4.2% and job creation exceeded expectations. That's what we were saying. A lot of the things with the tariffs and everybody was getting a little upset. The market is still strong. I mean, we're still seeing a lot of good economic indicators, and corporate earnings have been good as well, which is, once this gets ironed out, I think we're going to see a big surge. This upcoming economic releases this week brings several important updates. On Tuesday, yesterday, the trade report balance will offer insights on the U.S. exports and imports. Today, all eyes are on the Federal Reserve as it announces interest rates, the latest decision. Then tomorrow, May 8th, the release of the wholesale inventory data will shed light on supply chain and business stockpiling trends. So we're seeing an uptick in the market today because they're saying we're going to get a cut, but they're probably going to pause this week and then maybe cut the next week. Because the next month is kind of what the consensus is as far as rate cuts are. We definitely going to need to see some cuts coming forward. That's going to help spur as well. So look at the market outlook. So far, around 3/4 of the S&P 500 companies have reported their quarterly results, and analysts lifted their overall expectations once again. As of Friday, Q1 earnings were expected to rise an average of 12.8%. 2 weeks earlier, they projected only at 7%. However, guidance for the second quarter earnings growth has weakened as companies are concerned around consumer spending and tariffs, which we talked about. As long as we see good earnings, the market's going to go up, and that's kind of what we've been seeing. The Federal Reserve is set to meet this week with a decision on interest rates expected Wednesday. Markets widely anticipate the Fed will leave rates unchanged. Looking ahead, investors are now pricing in at least 3/4 point rate cuts by the end of the year. That would be good to see. I think it's going to help that we're starting to see a little lag in the resale market for homes. So hopefully this will help with that as well. But there's still not a lot of inventory out there. So we're starting to see a little bit more inventory now as well. Recent activity, there was no changes in the Gradient investment portfolios last week. As you know, people say, why'd you sell that position? Because Gradient rebalances every quarter. They're going to look at the portfolios, rebalance, and do what we have to do to change the portfolios to make sure they stay in the metrics. Now let's talk about stocks in the news. Meta, which is in the Core Select and G33, reported a stronger than expected earnings beat last week. The company also raised its 2025 capital expenditures guidance to a range of $64 billion to $72 billion. With the bulk of the investment aimed at AI infrastructure, the stock gained 8.6% for the week. How about Apple, which is in the Core Select and G33, reported an earnings beat last week. While Apple plans to shift most U.S.-bound production to India and Vietnam to mitigate the impact of tariffs on Chinese goods, it still anticipates an additional $900 million in costs in the upcoming quarter. So the stock was down 2.28% for the week. But you're seeing a lot of the companies are starting to shift. They're starting to pivot with the tariffs, and we're also seeing, as Trump talks about, the pause on that 90-day pause, and also working with them. So there's a lot of good negotiations going on right now, so I'm really optimistic what's going to happen with that. That's it for this week. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, you know the number, 855-756-5700. Visit us at vitalewealth.com. And coming up this weekend, we've got Mother's Day, so we want to wish all of you mothers out there a very happy, holy, blessed, joyful Mother's Day. We hope you're able to spend some time with your family and loved ones. God bless you. We'll see you again next week.